What's up guys, welcome back to another video. Thanks for tuning in to Stock Essentials. My name's Alex and today we're going to be going over Blackberry stock. As we can see on our screen here, Blackberry is sitting at a price point of $12 a share, down 4% and another 1% in after hours today. And they fell quite a bit from after earnings. They met expectations for their earnings. Let's see here, at negative 5 cents per share. So right on the dot, they met expectations exactly, and this caused the stock to fall quite a bit because I guess a lot of people were anticipating some really good numbers for this quarter. And when they just posted par results, it didn't really please too many people, and people ended up selling off because they thought BlackBerry would have really good earnings and it would continue the meme stock rally. So pretty big sell-off today for BlackBerry, sitting at $12 a share, but it's still not that low. As we could see, it's still up 147% a year, but it's still down 50% from its all-time highs of $25 a share. So there is still a lot of growth potential with this company and the stock in general. So I'm definitely going to be keeping my eyes out for BlackBerry. And now is actually a pretty good dip to buy on BlackBerry, especially after earnings, because as you guys know, with earnings, before the earnings is announced, implied volatility is sky high until they report their earnings. So after earnings, implied volatility gets crushed, and it's really good for options because options are going to be a lot cheaper after the IV crush because lower implied volatility equates to a lower premium for these options contracts. So I am probably going to be picking up some calls on these options contracts. So we will see what happens with BlackBerry stock. So as we can see, BlackBerry stock fell even though they met earnings, and they're pretty much just struggling. I mean, negative 5 cents a share for their earnings is not great. They were anticipating it not being that good. So yeah, when they reported that they met expectations, a lot of people were disappointed. And a lot of analysts are actually downgrading this stock, trying to, which leads me to believe that they are shorting this stock. They're doubling down on their shorts, and a lot of these analysts are trying to create fear with the stock and try to drive the price down in order for them to make money on their shorts. So that's why I think now is a really good buying opportunity. A lot of people are preparing. One of the most dominant expirations is for the September 17th call options, sitting around the $7 strike. So if we take a look at the options chain, that's going to be 3 months out. So a lot of people are going to be buying out long-term calls because they think there's going to be a nice little rally for BlackBerry, but we don't know when. So 3 months out is pretty safe. And if you go further in the money, you're going to be hit less with time decay because the further in the money we go, the less data there will be. Because it more closely resembles 100 shares the further you go, because the delta is going to be a lot higher. As we can see, $7 strike is going to have a delta of 94%. So if every dollar BlackBerry goes up, the premium of this contract will go up $1 as well. So for example, if BlackBerry goes to $13, the value of this contract is going to be $625, roughly around there. So that's how you can kind of gauge the options pricing with the delta. So if you want to buy into BlackBerry, you want to buy into some long-term options. The $7 call for September 17th is pretty good. If you want to be a little bit risky, you don't mind the higher theta decay and the lower delta, something like $13 call or $12 would be good as well. And of course, if you want to do a YOLO, you want to do something a little further out of the money. I wouldn't do anything too risky. The most I would go would probably be up to $20. But you're most likely going to lose your money if you go this far out of the money. It's going to be pretty risky. So something closer to the money or even kind of deep in the money would be pretty good for call options. And now is a really good time. As we can see, implied volatility 81%. That's due to the IV crush that occurred today and yesterday because of the earnings when implied volatility ran up pretty high. So now is really good to get into BlackBerry stock if you are looking at it, especially with all these analysts downgrading it. A lot of attention has been taken away from Blackberry. So now the premiums are going to be a little bit lower, and it's going to be a good time to buy in before it starts ramping up again. So that's my take on Blackberry stock. Leave a comment down below if you are going to be buying Blackberry and what your thoughts are. Leave a like if you like the video. Of course, subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.